Business over drinks. Business over drinks. This is Dave and Tom. This is business over drinks.
All right, we're recording.
Hey everyone, welcome to Business Over Drinks. My name is David. How you doing?
And my name is Teng. I'm calling in from Singapore. I'm doing really well, David. We got a really exciting one, a slightly different one as well.
Yeah, so today we're doing a more of a shortish episode based on what's happening in this world at the moment. Well, one portion of what's happening in this crazy world we're living in at the moment. And we're specifically going to talk about NFTs and Luna. You may have read the headlines or seen headlines about it. Well, we have an industry expert here to talk to us today, and he was actually a previous guest. And this guest, Tim Lee, this episode with Tim in it was actually the most popular podcast episode we've had in this podcast. So we just had to invite him on. I think people just loved what he brought to the table and what he presented to us and how he clearly really explained things. So I'm really excited for this interview. But before we do ask the questions, Tim, I'll just do a quick intro about you. So Tim is a veteran of the cryptocurrency space, and he's been an active trader, commentator, and cryptocurrency investor since January 2015. He's a keynote speaker, further to his book on the blockchain in plain English called Blockchain Down the Rabbit Hole. Discover the power of the blockchain. He has been actively involved in cryptocurrency projects linked to film piracy, loyalty, and fractional ownership. He's currently working with an international team on an NFT slash Metaverse project, Walking Between Worlds. And you can check it out on our show notes or go to walkingbetweenworlds.net, which is empowering Indigenous artists globally to capitalize on NFTs. And Walking Between Worlds has recently launched its Genesis collection, so do check them out.
Yeah, we'll put the link in the show notes for sure.
So welcome to the show, Tim.
Awesome. Thanks, guys. It's great to see you. It's been a while. I think we were in lockdown last time completely, I think.
Yeah, we were.
We spoke last time. So luckily we're out of it, but we'll see how we go.
Yeah, I mean, it's been a while. Things have changed. I think what's been really exciting, at least, I say exciting, but probably exciting in a horrible way, has been how the fluctuations and the volatility of the crypto and the NFT space in the last, I would say, 6 months. Right. So this episode is, as David mentioned, primarily around Luna, Terra, and all the issues that I have coming around there. So let's keep it really simple. What I'd like to ask you first, Tim, is can you actually just give us kind of a breakdown on what's happening with Luna and Terra at the moment?
Well, I mean, it's a constantly moving beast since the collapse of from the 7th to the 9th of May, essentially. Where the price of Luna and the price of Luna is now, I can't even count the number of zeros in front of the one. It's worth absolutely nothing. And the UST as a stable coin is no longer stable. I mean, it's just insane. There are rescue packages that are trying to be put out there. There's still a lot of toing and froing. Nothing's been resolved. There are votes going on at the moment to try and look at different structures to rekindle it, because there are a fair number of projects on the ecosystem. So, they're trying to salvage, I think, what they can from the Terra Luna blockchain itself to try and see if there's anything, and actually stripping out potentially the whole stable coin structure. But I mean, it's all in vote. They're in voting at the moment. So within the next few days, it should crystallize. But obviously, it's had a major effect on the whole market. It's been a very challenging 2 to 3 weeks, as we know, in the whole crypto space.
So what exactly is happening? Like, how did this all happen?
Well, the long and the short of it is a stable coin should be stable. So with a number of the stable coins, one stable coin equals $1, and normally. There are some traditional stable coins where there's cash or near cash that supports that one stable coin is $1. Luna, like a number of other stable coins, is algorithmically based. So it's based on a whole variety of structures that are going on in the background. to try and stabilize it through various mechanisms. And the core mechanism was if Luna went up, if UST was $1 and Luna was at a certain price, if either go up and down, what happens is UST are minted and Luna are burnt, and vice versa. So the idea is that the Luna and UST are a bit like a sort of a set of scales that are trying to come into equilibrium. But there are more layers to it than that as well. And this seems to have been a very well executed exploit. Now, allegedly, the particular party made about $950 million is the estimate from the exploit. And bottom line, it happened on a Saturday night when volumes were really low. And so the market essentially was exploited by means of the fact that, as we see in the whole crypto space, on the weekends, whales go out and play. They will manipulate the market because the volumes are low. And so part of it was linked into that. And so the idea was the normal algorithmic side was generally working okay. But once it gets below a certain level, once it falls below a particular trigger point, then Terra actually were going to be putting in Bitcoin and a whole variety of other cryptocurrencies to support it. So it looks as if it was very much like George Soros in about 1985, I think it was, in the UK. He broke the Bank of England in a similar structure where there were lots of pegs and mechanisms in place. And the UK government just said, we've got to prop up the pound. Propped it up. George Soros just betting against that and made a lot of money. It's essentially the same type of structure. From what I can ascertain, it seems as if the alleged hedge fund has shorted Bitcoin at the time when Terra were trying to prop up their peg. And as a result, it just everything started cascading down. And people who were investing UST, which is a stable coin, in a savings pool and making 20%, started to panic because the price was actually falling and falling and falling. And it just became this bank run. It was like essentially the whole UST debacle was like a major bank run. People just lost confidence and everybody was selling. And unfortunately, a lot of people have lost money. A lot of people have lost life savings. And, obviously our hearts go out to them in terms of the challenges that presents. But it's the ramifications of this attack and the ramifications of a stable coin not being stable and actually destabilizing the entire crypto ecosystem, for want of a better way of saying it, is going to present major challenges going forward.
Okay, that's really interesting. So, because I'm looking at this from both as an interested party and also someone who is potentially a crypto investor, right? Because there are still people who are, for example, a lot of crypto influencers right now are trying to push people to invest during what they see as a downward spiral, and then so that we can take advantage of the upward spiral, right? Because they're using more traditional historical stock movements to kind of mimic what it would look like, right? But I think what we're seeing here potentially is, and maybe I'm looking at and trying to understand from your perspective is, did we see a bubble that burst? Because I don't think that the crypto industry is going to die. I just see that something happened. But was it a bubble? And now are we stabilizing at a normal level that may not reach the peaks at what it was before?
That's a very that's a very deep question on so many levels. I think the key thing was that as a stable coin, UST was offering around 20% return. Okay. Now, when you look at the competing market like USDT, USDC, all the other stable coins, they were offering anywhere between 2.5%, 4%, 6%, 7%. So this was way over the top. So a lot of people were putting money in because they believed that a stable coin would never fall. And once the stable coin falls, you then start losing money in a big way, and everybody panics. And that's what, that was the end result of the exploit. So was that a bubble? In some ways, because they were offering 20%, it was the idea of them buying market share, is the way that I see it. Right? I'm not suggesting for a minute that I don't believe, I see it as being them trying to buy market share. Because the problem is, we know in DeFi, if there's a percentage point, if you've got something that's presenting 20% and then something's offering 8%, there's a big difference that's going to draw you to one or the other. So over time, it's not sustainable to pay 20%, because that's just not what the market's saying. So it was already overinflated, I think, in some ways. But do I think crypto's in a bubble? No, I don't. I think this is going to be one of the tipping points that we will see. We'll see Terra UST being a tipping point in the future where things change. And I think they will change for the better. I think the regulators are all over this in terms of there was almost $50 billion worth of value that was lost by these two particular currencies themselves. So the regulators are going to say, hang on a second, what's going on in crypto? Let's get deeper into it and let's actually protect retail investors and that type of thing trying to get involved. So I think we'll see a lot of changes happening over time. I don't think it's a bubble. I mean, I'm like you. I mean, obviously not financial advice, but like you, I'm a long-term believer in crypto. I'm a long-term believer in the underlying technology. And we'll come on to NFTs, obviously, I know, as this discussion goes on. But I think the way the technology is playing out, when we look at DeFi, we look at the Metaverse, we look at NFTs, we look at tokenization, this technology is not going away. There are too many powerful benefits for it to go away.
Yeah, no, I agree with that. Dave, do you mind if I ask one more question? It's just more of a basic question, because I think we kind of jumped the gun a little bit, right? Are you able to give us kind of like a quick breakdown of what a stable coin is? Because I know you touched on it, you explained it, but maybe something that someone who's never really heard about stable coins before.
Okay, all right. Well, let's look at something like USDC, something like that. Now, USDC has a very strong reputation. It's regulated, and a stable coin is where you get all the benefits of being able to transmit a cryptocurrency internationally, right? And it has the hallmarks of the technology, but it's actually linked directly to traditional fiat currencies, as they're called, like US dollars or Singaporean dollars or Australian dollars, that type of thing. So the idea is that if you've actually got a bank account that's got $1 billion, and a party says, we have got $1 billion here, you can check it anytime you like, here are $1 billion worth of stable coins, that represents that money that's actually based there, right? So we all know if there's dollars, $1 is $1. That's straightforward. Okay. With an algorithmic stable coin, it's very different. There's programmatic changes that bring things into equilibrium. So stable coins, they become important in the situation, for example, if Bitcoin is falling quickly, and let's say it's at 40,000 and there's some really bad news that comes out about Bitcoin, you convert your Bitcoin into a stable coin, into US dollars, USDC or something that's got a good reputation. That then means you've got the USD value of Bitcoin when you sell at 40,000. Bitcoin then falls, you then go back down and you buy up more Bitcoin using your US dollar. So it's what is known as a hedging structure. So you can actually make sure that you've sold at 40, but you buy back at 30, for example. So stable coins, that's what the big use of stable coins is. So if a stable coin is backed by dollars, that's great. If it's algorithmically backed, it should be stable. But there have been various situations where algorithmic ones have had problems in the past. But so stable coins are right in the heart and epicenter of the cryptocurrency space to protect traders as far as possible if they want to get out of a risky situation. Does that give you a feel for it? Yeah.
And how did it all fall to pieces?
As I say, it does get very complicated. But with UST, it fell to pieces because the algorithms were they were played were not manipulated, but they were managed. Let's say.
Yep.
So there's allegedly, and I mean there are several different theories. So I'm only speculating on some theories that are out there. Allegedly, a hedge fund sold or had they sold a bucket load of BTC, Bitcoin, to short. They knew this was coinciding with the time where the peg on the stable coin was getting to its threshold where UST would actually have to sell Bitcoin to actually cover, to prop up USDT, right? And what happened was the more they sold, the more the actual price of Bitcoin fell. And the more that UST fell, and these people who had 20% interest earning on the savings pool suddenly saw, instead of it being worth $1, it was only worth 85 cents, 79 cents, whatever it was. So they were selling. So it was like a bank run. So everybody started selling. And so we had the situation where it got down to about 6 cents, I think was the bottom line. But it was an exploit from a hedge fund that caused the problem. So they're either evil geniuses or they're or they're completely manipulating the market. And I think there's probably somewhere in between.
Both, for sure.
Yeah, I wouldn't say geniuses. I'd just say evil and manipulating the market. I think that's a stronger term.
Pretty smart.
I mean, allegedly, again, and I mean, in the fullness of time.
Tim's really worried about the lawsuit that's coming his way.
No. I'm fearfully conscious that one has to make sure one doesn't categorize an individual company or individual, and to protect everybody else as well. I mean, I think it's it's a nightmare situation. It's the worst thing that's happened to crypto. Certainly since I've been involved in it, it's just caused the market just to lose confidence. I mean, all the other algorithmic stablecoins, fell in price dramatically. All the other stablecoins that were backed by US dollars even fell a bit as well, because there's been a lot of rumors around USDT over many years, which is the largest stablecoin. And I mean, I don't propose we go into all the details of that, but if you look up the history of USDT and how the auditors in New York refused to sign off on an audit to actually confirm that the balances were supporting USDT. This is going back a few years ago. So people have always had this nagging doubt in their mind. And when you've got one stable coin falls, it preys on people's mind to say, heck, is this just the beginning of something really bad? Thankfully, it wasn't. So, we can breathe another day, thankfully. We can, I mean, it's like whenever there's an exploit, I mean, it is one of those things that we come out stronger out of the back end. That's the key thing, because there are lessons that have been learned. And, whilst it is very, very painful, and I really do feel for all those people that have lost money. I mean, there's a lot of retail investors who've been badly burned. So, again, I do want to express that's very tough. But, it means that the next iteration of stable coins will have the bad lessons to improve on. Mm-hmm. So we will see an improvement at the same time, but it will be something that I think will probably be in the doldrums for 3 to 6 months, I think, in my view, especially given what's happening with economies globally, with inflation, with the potential of recession and a whole variety of things. But I'm sure we don't want to get too depressed about things, because there are some positive things to talk about, I'm sure.
Not really. Not in this not in this particular topic. Dave, sorry I cut
No.
you off, man. You had a question?
No, I was just saying that Tong and I were just talking about it the other day. That it's kind of like the .com crash, where it's kind of like a weeding out of the people who are just in it, thinking that they'll get a quick win, but not really understanding the fundamentals of it all. So hopefully there is a brighter future, as he's implying. But on another topic that's still kind of attached to it, NFTs. What's happening with NFTs at the moment? Are we in an
Yeah,
NFT winter?
yeah. I think the key relationship to understand is that if Bitcoin sneezes, Ethereum gets a cold. If Ethereum gets a cold, NFTs get flu. Right.
COVID.
So whenever there's because the majority of NFTs are priced in Ethereum. So Ethereum's around $2,000 US right now. It was at about 3,800. I mean, it's nearly halved in price in in about 4 to 6 weeks. So it's had an effect. And I think it's also that what's happened in geopolitically, internationally, has taken the air right out of the markets, because for the first 2 months of the invasion of Ukraine, all the news was on Ukraine. Is there going to be nuclear war? Is there going to be all this sort of stuff? So all of a sudden, there's massive risk that's out there. And so if one's involved in NFTs, then it actually means you're holding a far higher risk asset. And one of the challenges is and this is for anybody that's looking at NFTs, if you need to sell your NFTs, you are going to have to take a massive discount if ever you want to sell an NFT, because the liquidity, the amount of NFTs that are around are very, very limited. And so you get what is known as a liquidity discount. If you're forced to sell, you're going to have to sell at probably 50% of the price, roughly, right? And so, it means that it's a far, far riskier asset class to be involved with. So when everything is, when Bitcoin and Ethereum are weaker, that generically creates a weak market for NFTs. And when you look at art as an asset class in general terms, it can so often be a discretionary piece. And you're going to say, oh, yes, I'd like to have a piece of art, but I don't need it. It's like if you've got a headache, you want a painkiller now. But if you want to be healthy, you'll have vitamins. So vitamins aren't as powerful as a painkiller, right? And art is a discretionary purchase. So collectively, we're in some challenging markets right now. The volumes on OpenSea, and anybody can look at this data. There's a really good website called Dune.xyz. It's open source. You can check out the data for yourself. You can see the day-to-day sales volume on the Ethereum network, on OpenSea especially. And those sales volumes are about 70% below where they were at the very beginning of this year. So it's a cumulative set of effects. It doesn't help when the cryptocurrency markets are suffering because of UST at the same time. So everything is just coming together to make NFTs a weaker asset class in the short term. But I think in the medium term, let's not lose sight of how powerful NFTs are as a technology. Because, and I've just been preparing a major talk over the past 3 to 4 weeks, and I've sort of looked at a lot of the data. And back in 2020, the annual sales of NFTs were about 80 million, right? This is in 2020. In 2021, it was 17 billion, right? So that's a 21,000% increase. The actual NFTs themselves are very powerful because they define ownership. They can be programmed so that you can actually automatically get royalties, and you can immediately sell them for Ethereum and that type of thing, rather than going through a banking system, which will take 2 to 3 days to do an international transaction. So ultimately, NFTs in the medium and longer term will be very strong. We are in a bear cycle at the moment. As to whether it's a winter, that's hard to tell. There are so many factors going on. But if we see Bitcoin starting to consolidate, in other words, where it goes up, maybe it goes up from 30,000 to 38, then down to 32, then up to 36. So it's getting to this, it's almost creating this sort of this triangle shape. When we get to that position, NFTs get stronger. That's the experience over the past year or so. So are we in a winter? Perhaps. Is there a chance we could come out of it? 100%. 100%. But I think the underlying technology is just motoring ahead.
No, that's interesting, because I think one of the concerns, I guess, about NFTs has always been the fact that the majority of people very active, having people who have no interest in the long-term benefit but have interest in it's quick flip, right? So it's like it's quite a lot of industries quick flip. Is there, in your opinion, and again, this is there's no, I don't think there's a science behind this, but in your opinion, do you think that there is a long-term industry around the current structure of what NFTs are? Or are we just seeing the first iteration of NFT technology being used for something? This is the proof of concept. And then a year down the line, we're going to see NFTs utilized in so many different ways. It's like blockchain, right? We still associate blockchain with crypto, and blockchain is a lot more than that.
I think it's so project specific, if I'm honest, because there are a lot of projects that have got some really good long-term goals, right? If you've got people that are, here's a collection of 10,000 pieces, we're going to build a game in 2023, we're going to be the best thing since sliced bread, yada yada yada. If there's no exceptional utility going through or long-term strategy linked into the NFT project, I think a lot of those projects will die. For example, with our project, with Walking Between Worlds, we're looking towards empowering Indigenous artists globally. Now, the big problem we're trying to solve is that Indigenous artists or Indigenous communities across the globe suffer from a massive digital divide. So then they're not able to capitalize on NFTs right now because there's a massive learning curve that has to actually happen. And so, for the longer term, we're trying to bridge that digital divide to make it stronger. Now, if we identify with the right communities across the globe, then, we can really support those communities. So that's an example of sort of longer term structures. And if you look at the Bored Ape Yacht Club at the other end, the extreme end, for example, Bored Ape Yacht Club, great community, selling for a bucket load of cash, their actual NFTs, but they just launched, a metaverse for the Bored Ape Yacht Club, and their land sale raised $285 million. It was insane, and then they released ApeCoin, which has a market cap of about $4 billion. So there's pockets of where long-term value can be created. But I think, with a lot of NFT projects where people are looking for quick flips, those are increasingly beginning to die. I think it's very much people are becoming much more aware of what the long-term benefits of any project may be. So I think the underlying technology will present great opportunities, but in the short term, a lot of projects will die.
Got it. Okay, now that's really interesting.
Yep.
Dave, do you want to ask any questions? Take us out.
No, I think that's a really good point for the value investors out there. It's about it's just like stock. Like you're looking at the long term opportunity of or what's behind the underlying technology. Just to close off, though, would you say would this obviously this isn't financial advice, but are savvy, from your observations, are savvy investors just kind of just observing what's happening at the moment, or are they looking for these pockets of opportunities and still putting money into crypto and so forth?
I think what we're seeing is, I think there's a bit of a reset as it stands right now.
Yep.
With what's happened with UST, with Bitcoin and Ethereum coming down. I think what we need to do as an industry as a whole is to make it easier for people to get into NFTs. All right. I'll give you an example. We offered a concierge service to investors or to supporters of the project that were buying in bulk. And so we were talking to a lot of folks who had never bought an NFT before. And that concierge service took an hour and a half per person. And that's not scalable. In terms of you've got to go through what is a MetaMask wallet, looking after your seed phrase, all these things about what an NFT is, what blockchain is, all this type of stuff. And so we have to make those friction points easier. And if we don't do that, it's a massive barrier, because, if people want to get behind artists or behind projects, they've got to go through that whole process. And so we have to make it easier. I mean, we've just written an introductory guide for buying your first NFT linked into the Walking Between Worlds project. And that document is 53 pages long. Now, I mean, that assumes you know nothing, right? We've broken it down so you can look at exactly what you want to do. But going through that whole process, diagrams, all those sorts of elements, it's 53 pages long. We're condensing it with videos right now, but we found that people wanted that because they wanted to understand exactly what was going on. And that's a challenge for the crypto industry as a whole has a challenge. How do we make it easy for people to understand? And when I look back at sort of the whole .com boom and bust, for example, the internet was defined as the information superhighway. Everybody kind of got that image. When you talk to anybody in the crypto industry, if you say, tell me what the blockchain is, right? Tell me in 20 words what the blockchain is in plain English. And it's a nightmare to actually describe. We have to make it easy. So I think in answer to your question, I think value investors, the ones that are serious investors, need to get into crypto and to actually be aware of cryptocurrencies, NFTs, and everything to do with digital assets as a whole. And that will take time.
Yep. Yeah, and I think there's a big stigma that we need to get over with crypto, because instinctively I just think scam. I'm personally invested in crypto, but there's just so much crap out there that a lot of people just think it's a scam. It can be a scam if you're not educated enough.
Absolutely, and I think it is one of those things. The scammers are 2, 3, 5 stages ahead of people coming in for the first time, so they know exactly how to push those buttons that make you think, oh shit, maybe I should listen to this guy because he seems to know what he's talking, or her seems to know what they're talking about. And so scammers rely on new people coming in as the fresh meat that they're gonna try and get a hold of. So it's education is so important. And I would say to anybody who's getting into NFTs for the first time, spend 30 to 50 hours researching before you buy or sell your first NFT. And I think it's really important that people do understand that, because I've seen far too many scams over the years, and I'm sure you guys have as well. And we just have to stop it. We have to help people to help them get across that hurdle. I mean, I'm sure you've seen it as well. On the weekends, when the US market closes on a Friday night through until Monday morning US time, that's when the volatility of Bitcoin and all the other altcoins just is far higher. And the whales just play their games at the weekends. I've seen it generally 3 out of 4 weekends. Just watch it. On the Sunday afternoon, our time is often the time when you can, when you see most of the
volatility. Yeah, I'm taking notes. I'm going to be might be investing in the weekend then.
Well, it's just interesting to watch it. I mean, and maybe I should get out more. Maybe I should get a life. I don't know, but it's I find it really fascinating when when I've been in front of the screens and that sort of thing and traded. And at weekends, if you know what you're doing, you can make some good money. I'm not saying that I get it right all the time, by the way. I'm not saying that at all. But have a look at it at the weekends, mainly
Well,
Sunday afternoon local time.
awesome. We'll do, and I'm sure our listeners and viewers will too. So thanks for coming on the show, Tim. And for
Okay.
everyone else, thank you so much for tuning in. Don't forget to like, subscribe. We're on every channel, so look up Business Over Drinks. And Tim mentioned a few websites. And if you'd like to check out what projects he's working on, visit our show notes at businessoverdrinks.com. Thanks, everyone.